My name's Scott Dahl. Thank you for tuning in to another one of my podcasts. I'm recording this on March 24th. It's right about 11 o'clock Pacific time, and I wanted to look at three things today. I want to look at the price of oil. I want to look at investor sentiment, otherwise known as investor psychology, and then take a look at the Dow Jones Industrial Average to see where we're at price-wise. The first chart I have up is a chart of an oil index called the Amex Oil Index. The symbol is XOI. It's not the price of oil itself. It's an index of oil producers, oil refineries, oil exploration. They put them all together. They create this index. The reason I like to use it is because it tracks the price of oil very, very closely. This from here, right here, up to here is what's called a parabolic move, straight up. Parabolic moves, in my experience, have never lasted. This, when it turns, it should drop and drop sharply. Who knows what the catalyst will be? I'm sure we have some guesses. But when it comes down, what that's going to, in all likelihood, do is take the lid off the stock market so the stock market can recover significantly. So that's really what I'm looking for. I still believe we're in a cyclical bull market. I believe this is a correction in a cyclical bull market. What I have up now, you've seen it before from me. This is a market sentiment survey. It's produced weekly by the American Association of Individual Investors. The green is bullish and the red is bearish. When we have a high number of bears, that typically signifies that the sell-off is over because the invested public is typically on the wrong side of where the market is headed. If we have a high number of bulls, then that could be a sign or should be a sign that we're seeing some form of market top. As of March 18th, the most recent survey, we had a little over 30% bulls. You can see it right here. We had 52% bears. So we've got a significantly larger number of bears than bulls. If we drop down here, we can see the one-year high. Both of these, the bullish high was 49.5%. That was on January 14th of 2026. And the bearish high was the week ending April 2nd of 2025. So now that I've got the chart up, let's look at those dates. So on April 2nd, which was right here, this green line right here, that was when we had the largest number of bears over the course of the last year. So you can see we went down further, but you can see that we went significantly higher. The big number of bears came in at the bottom. The highest number of bulls over the last 12 months was right here at the absolute top. We had the highest number of bulls, and you can see what happened. The market sold off. So the fact that people are becoming, the investment public's becoming more bearish or exceedingly bearish is a very good sign for a potential turn in this market. So I have the Dow Jones Industrial Average up. I put in some retracements. I explained the Fibonacci retracements in previous videos, but these act as support areas. So as the price comes down, it hits these support areas and it has the potential of stopping. So we went back, this is 38% back. This is 50% back, and this is 61.8% back. These are the three logical support levels. We can see that the first support level it's trying to hold that level. It came down to it, almost got to it, then bounced up. Now we're seeing some type of technical recovery. Another positive about this support level and why it could potentially hold is because I'm going to shrink the data so we see more of it. You can see that these tops right here, here's a top, here's a top, here's a top, that these tops are now significant support levels. So we're back into this significant support level because of these tops. And this interestingly enough, is when the market broke out and started on this higher sloping trajectory, which was in all likelihood unsustainable. So this looks like a correction to me, a garden variety correction. I do want to point out that in midterm election years, which are historically very volatile, we average a sell-off of about 17% per year. We're down about 9%. Again, this is a Dow Jones, but if we were to come down to 17%, which is our average correction, puts us right down here. So 17% back puts us at this bottom support area. Can we get there? Of course we can. There's absolutely no reason why we can't. Will we? It's yet to be seen, but I will tell you that we're finding some extremely good support here. Something else I want to point out is this white line here. See this white line? That's a 200-day moving average, and it's okay to slip through it, but then you want to move up above it, and so that what it does is when it slips through it, it actually aids in flushing out more and more of the speculative excess. So this white line is very important. We want to get back up above that. Also, down here at the bottom, see that low there? of this line and see the low here, this is a sign that the market is very oversold. So when you get down to this green line, that means that it's oversold. The red line up here means it's overbought. What's overbought, oversold? Well, oversold is, you're going up like this, and then all of a sudden you start pulling that rubber band down, and then boom, you release it and it snaps back. So that's what oversold is. So this market's getting pretty oversold, where it will run out of sellers, and then the buyers will come back in if they haven't started doing so already, and that'll boost the market higher. So I firmly believe that this is indeed a correction in an ongoing cyclical bull market. The indices, I don't know if they're going to do that good this year, but I do think if you're a good stock picker, if you trust the momentum of the market and pick strong momentum stocks, that you have the chance of making decent money this year, even if the indices, the Dow Jones, the NASDAQ, the S&P 500, even if they don't go anywhere, you can still make money here. But anyway, if you have any questions, give me a call, 949-497-6366. It's dahlcapitaladvisors.com. It's Scott at Dahl Capital Advisors. I'd be happy to discuss these further. I'm going to come out every time I think that there's something important that we need to discuss. I'm going to put these out, and hopefully you enjoy these. I enjoy putting them up. Call me if you have any questions. Thank you, and I look forward to doing another one of these soon.